Good morning, everyone. Welcome. It is half an hour before the market opens on Friday, February 23rd. Yesterday, we had a massive jump in the markets because of NVIDIA earnings, and it really carried all the major indices up. What we want to see today is whether or not that's going to continue or if we kind of peter out. Normally, after such a big move, at the very least, we will go sideways because the market is still digesting everything that happened. And if we've already moved so much upwards, what has happened is you've taken a lot of people have made overnight profits and they will start to want to take those profits off the table. So that's usually why we don't continue upwards. We'd have to have a lot of exuberance in the market and a lot of stimulus in the market and a lot of things to help people continue to feel like the market is going to go higher. Otherwise, they're just going to take profits. So we want to examine whether or not there is any of those stimuli for us to go even higher. Right now, based off the top of my head, I don't know of any. So we'll just have to explore and see. Let's take a look at our futures first. And our futures are flat, nothing, just 0.1% maybe on all three. So nothing significant there. So far it's looking like we're having a little bit of a hangover and we're just going to go flat. And yeah, so far just up baby amounts. So it's Friday. There's not going to be a lot to stimulate us on a Friday because all of the reports are out of the way. We have nothing on the economic reports. We have our earnings. Very few will report on Fridays. We only have Warner Brothers reporting today, and they're not a huge market cap and not super paid attention to. They're paid attention to, just not a whole bunch. This is just communications. They won't have an effect beyond the communication sector. Our fear and greed index, we're back to extreme greed. So we're up very high after yesterday's jump. We just went from towards the lower end of greed and straight back into extreme greed. So this, so far, it's feeling like we might be topping out right here. And there's really nothing else. So we can look at TLT, we can look at this Fed Watch tool. Really nothing happened to affect interest rates yesterday. So probabilities even lower of a rate cut in March. And then if we look at May, now we're only at 22% possibility of a rate cut. So that keeps dropping. No, we're kind of in line. So without any stimulus, a rate cut would stimulate the markets upwards, and we're not anticipating a rate cut anymore anytime before June. So really, there is nothing to get investors or traders excited about to the upside. So it really does seem like we'll get more of a sideways day or a very muted upwards day or even a pullback today. So let's see. Oh, let's take a quick look at TLT. Yeah, we're just going to open exactly where we closed yesterday. So nothing exciting right there. If I look at the indices, S&P just looking like it'll open just a hair above the highs of yesterday. So that's interesting. We'll take a look at that on a daily chart in just a moment. NVIDIA continues to move upwards. So there's still enthusiasm in NVIDIA in particular. So what we want to see is, does that enthusiasm carry over into the QQQ and therefore the S&P? And what is the Dow Jones looking like compared to the QQQ? So yesterday we had broad market rally. The S&P gapped up, made new highs by far. QQQ gapped up and only matched its previous high. And then Dow Jones gapped up and also made new all-time highs. So relative to the QQQ, the S&P and the Dow Jones are actually stronger than the QQQ, which is interesting because the event that brought everything upwards was in the QQQ. It was a significant stock that is in sectors that are mostly covered by the QQQ. So that means the strength in NVIDIA, yes, it carried the entire market, but it was spread among sectors. It wasn't focused just on tech and just on semiconductors. All the other sectors went up as well. So what we'll want to do is see what the separation, what the spread is in those sectors and see which ones are strong. So if tech is not the strongest sector after yesterday, that is going to be really interesting. And that is going to be another sign of weakness. So we'll take a look at that. Well, we might as well take a look at that now. And oh, that's interesting. 90-day highs, 440. 90-day lows, 19. So now there's a huge divergence. After yesterday, a huge number of stocks moved upwards or gapped upwards. Very few went downwards. We have this huge divergence. So yesterday we were looking for a divergence. We didn't really find a whole bunch, but this is a big one. We're at an extreme level. We're measuring only am I limited to the S&P? No, I'm not ETF and not small. So 440 stocks versus 19 stocks. Number one, that's a huge difference between the number of ones making highs and the number of ones making lows. And number two, 440 is an extreme number. Normally, on a normal given day, so if I go back a day, it was only 163. I go back a day, 145. Go back a day, 191. Why isn't this number changing? That's weird. I guess it only does it for whichever one I'm on. So if I go back a week, 27. So the normal range is in about 100 to 200. So we're at 440. We were well outside the normal range. And that's an extreme. Normally, when we get both a huge spread and an extreme number on one of them, that is a topping out pattern. And we'll, at least it doesn't mean that we'll pull back hard or necessarily pull back. It just means the ability for us to move higher is limited. So if you imagine 440 stocks made all-time highs yesterday or 90-day highs yesterday, can all 440 of them make another 90-day high today? Probably not. Some of those are going to fall out. And then all the ones that fall out have to be replaced by stocks that did not make a 90-day high yesterday. But why didn't they make a 90-day high yesterday when all these other stocks were making 90-day highs? When NVIDIA gapped way up, the market gapped way up and jumped higher. Why did they not also do it yesterday? It's because they're relatively weak to all those other 440 stocks. So for them to make a high today, when many of those 440 didn't continue to make a high today, that wouldn't make a whole lot of sense. That wouldn't be something that we would expect. So our expectation is that there's going to be less than 440 that can continue to make a 90-day high today. So that number is going to come down. And if all of those 440 were what helped the index get to where it was today, but now I have fewer of them pushing the index higher, well, the likelihood of the index going significantly higher is extremely limited as well. So based on that alone, we can probably guess that the indices are not going to make huge moves upwards today. Let's take a look at our sectors, though. That's what we intended to do when opening this up. So the sectors, what we want to see is over the last, so remember, we've been flip-flopping. Tech defensive, tech defensive, tech defensive. We started out this week defensive. So after NVIDIA had these huge earnings and we have these huge gap ups in our major indices, and we're making all-time highs or matching all-time highs in all of our major indices, did that make this week a tech week? So last week was a tech week. We started out this week as a defensive week. Presumably, if tech was so strong or NVIDIA was so strong and it brought the tech sector much higher, then that should have the power of flipping this week into a tech week. Now, if it was broad-based like it appears to be because S&P 500 went above and made an all-time high when the QQQ didn't, then this would still be a defensive week. And that would be really interesting, wouldn't it? With NVIDIA being a tech stock and being the stimulus for everything to rise, but they are not leading, then that is actually a sign of relative weakness for the technology sector. And for upward trends in the markets, we expect technology to lead the way up. So we'll look on a 1 week basis. And geez, okay, I did not. Tech is way down here. It's the last sector. Communications is the last sector. The only part of tech that is way up is the semiconductors, which is so really weird to have the separation of semiconductors and the rest of tech be so extreme, but to have tech be the last sector, I'm not going to, because this is an index and this is bonds. So if I'm just comparing the sectors, tech is the absolute last one over the last week. So that is definitely a sign of weakness. What that means is, what are the top? EBFP. So if I look at XLE and I go over the last week, you can see it's a nice upward slope. XLF, nice, beautiful. Oh, no, that's wrong. ELF, XLF. Yep, so it looks like almost the exact same thing. It's a beautiful uptrend. Didn't even pause at all. Just continued in this nice steady upwards trend. XLB. Yeah, just very strong. Very strong. And then I don't remember what the other one is. P. Staples. Yeah, very strong over the last week. If I look at the QQQ or XLK, it just, until the very last day, it was moving downwards. And the last day just made it flat. So this is why XLK is relatively the weakest sector out of all of them. So that's not making me super optimistic for all of our indices. Oops, SPY. So yes, we made an all-time high. Yes, it looks like we're going to open at that all-time high today. We are very close to this psychological resistance right here. And everything that we've seen so far is that we don't have a stimulus. We're starting to struggle. So I would really just expect it to chop sideways, maybe come upwards and get stuck at the psychological resistance, and then start to move back down to test the uptrend once more. And then we'll see. Maybe this is the time that actually breaks the camel's back and we fall through the uptrend line. But that's speculation. The fact is right now we're at all-time highs. We're above the trend line. We're continuing to move upwards, but there's a lot of signs and signals that there's limited upside and that we might just chop sideways. So that's the situation that we're dealing with. For now, yes, we would point our portfolios to the upside, but not with tech, for sure not with tech. It would be, so we might go, okay, next week we might flip back to tech again. That's true. That's very true. But what I would do is, we saw a few sectors, or at least one sector is XLF, that's just been this nice steady line. We didn't see this flip-flopping behavior like XLB. Oh, XLB as well. XLP? XLP kind of up, down, up, say up, down, up, down. It's flip-flopping with XLK. But XLB has been less, but the one that was really impressive was XLF. Just non-stop movement upwards and it just continues. So the sector I would focus on pointing upwards would be XLF, since according to the trend in the market, I should still be pointing upwards. I might as well do the one that is heavily reliable and continuing to move upwards. So I'd be focused on XLF and pointing my portfolio upwards. And then when we get back to this trend line right here, I'd start hedging. So that would be my personal plan. Okay, I think that covers everything. We got a pretty good look at the internal workings of the indices and the markets, internal view, I should say, not the workings of it. But we got an internal view of it. It's painting a very different picture than if the only thing I did was look at this chart and I removed all the lines. I wish I could. Let's see if I can. New layout. Yeah, if this was the only thing I looked at, I'd be, wow, look at this. Up, down, up, looking pretty good. But when we look at the internal picture of everything going on, then it's not looking so great. It's sort of like the person who's an athlete and looking really healthy and really strong, but they've got cancer brewing under the surface that they don't know about yet. So we've got cancer or illness inside the markets. It just hasn't hit it yet, but soon we can expect this to challenge the trend line, and more and more likely that we're going to break below this trend line when that happens. But again, we don't want to jump the gun. We just want to wait for the event to actually happen. Okay, that's it for today. You guys have a wonderful rest of the day, and I will see you guys in the aftermarket session.